Hello and welcome to another financial analysis video. Today I'm talking about Monsanto and their poor fourth quarter earnings. Monsanto went into the red in the fourth quarter. They lost 19 cents per share. Analysts had expected them to be pretty close to break even or technically a loss of 2 cents a share. And the company made some interesting announcements. There's going to be some restructuring done here. They're going to cut around 1/8 of their workforce, and they're going to do this over the next couple of years. They're going to do some restructuring, and they're going to buy back stock to the tune of about $3 billion. And to compare that, the market cap right now, Monsanto, is $42 billion. So based on the current market capitalization, they're planning on buying back approximately 7-8% of the outstanding shares. But again, that depends on future pricing as we go forward. Now, Monsanto's interesting because unlike yesterday where we dealt with a company that missed earnings and lowered guidance, Monsanto missed earnings. They lowered their guidance for next year, but their multiples are a little bit lower than the company we dealt with yesterday. In fact, coming into today, they are below market consensus. So one of the things I look at is I look at the drop versus analyst consensus, and I look at the worst case scenario. So Monsanto is saying that they're going to do $5.10 a share next year. Analysts were pricing in about $6.20. So that's a $1.10 drop. Now, if we multiply that by the forward earnings multiple of 14, so 110 multiplied by 14, it's about a $15 drop. So I'm putting a floor here on Monsanto around $70 a share. I think they are going to make a new 52-week low here. However, with that being said, because of the cost cutting, the share buybacks, this is where it becomes more like a Caterpillar situation where the company is operating more efficiently. Let's take a look at the returns. Now, this is where you have to be careful. Again, return on equity looks like it's just skyrocketing through the roof. But if we go back and take a look at the leverage portion here, this is my balance sheet components side. You'll see that equity in the organization has dropped, and it will continue to drop going forward as the company does share buybacks. So the return on equity portion here is quite frankly misleading. Now, if we look at the assets of the organization are a little more stable. So, that's where I like the ROA or the return on assets over here. And as we could see, even with the current quarter, the return on assets were pretty decent. So I'm thinking that this efficiency measure that they're taking is actually going to make them much stronger. Now, Monsanto is very seasonal, so we need to look at these measurements on a trailing 12-month basis. There you see the revenue weakness due to weak agriculture, and they're having some issues with, obviously, South America. Anybody that does business in South America is having some problems right now. But as you can see from a cash flow standpoint, they're keeping things pretty stable. As a result, from a free cash flow side, they're doing pretty well. The bottom isn't falling out on their operational metrics. So what I think is I think that the guidance is going to set a new pricing standard for Monsanto. The price is going to drop. It's going to drop to reflect even probably a lower forward multiple even, just because of some of the fears. However, something to keep in mind, and this is how it's a little different from Caterpillar. Caterpillar, we really don't know what's going to happen to mining. Mining looks really, really bad right now. With Monsanto, you have corn and soybean prices, which could positively impact the stock depending on how those things shift. So Monsanto is a company that I'm going to kind of stay away from, but I'm going to watch carefully in case it comes down into that low 70 area. And then I'm going to reevaluate for a possible buy. I hope you enjoyed this video. Happy investing.